So I have Bill Munn here. I'm Jessica Deacon, Boy Financial. We're going to talk about home care assistance. So with the recent COVID problems at long-term facilities, more and more people, they're staying home. And we have this new product that Bill's going to talk to us about right now. It's called Home Care Assistance Insurance.
Okay, so um, this has been around for a few years, and the company that provides this have shown statistics that people who need help, who have a need for home care assistance, if you want to call it that, um, they tend to live longer if they stay at home in their familiar surroundings than if they go into a long-term care facility. So that was the whole point of bringing out the program. Now that we've gone through COVID and all the horror stories that have been uncovered with regard to long-term care facilities and how the COVID has run rampant through the long-term care, and not just that, it has exposed the lack of care period in these long-term care facilities, how residents are sitting around in soiled diapers for days on end and all this kind of stuff. It's even more important for people, and people are, to be quite honest, they're scared silly to go into one of these facilities. So if they have the option to stay at home, why wouldn't you take that? So
Absolutely.
this is what this company has come out with. They have rebranded it to call home care assistance, because that is exactly what it is. It's assistance to keep you at home if you can't take care of yourself. Now, how they determine that is basically what they call the 5 activities of daily living. And if you think about what happened when you woke up this morning, well, the first thing you did was get out of bed, and that's one of them. Transferring position, getting up from this chair and going over there. That, if you can't do that, that's a problem. Going to the bathroom, washing yourself, dressing yourself, and eating. And if you cannot do 2 out of those 5 for whether it's a physical reason, such as a stroke or an accident or a broken hip or something like that, or a mental reason, whether it's dementia, Alzheimer's, that kind of stuff. If you can't do 2 out of those 5, you now have a claim. Okay? And what tends to happen with people who can't take care of themselves is that obviously the first place they go to is the government. So they go to what's called the LIND. It used to be called the CCAC, now it's called the LIND. And that's a government department that will analyze whether you get assistance, and they will send out someone to have a look at your circumstance and see what kind of help you need, and the first kind of person they will assign to you is what's called a personal support worker, who will go in and help you get out of bed and maybe make your breakfast or your dinner or your lunch or whatever, that kind of thing. My daughter's a personal support worker, so I know exactly what they do. And she has numerous clients throughout the day, and she drives around and helps them with various activities. And unfortunately, most people think that the government's going to just assign a personal support worker and they're just going to show up when you need them, how often you need them and stuff, and that is not the reality. Governments are stretched to the limit. They have no money, and they may assign a personal support worker to you maybe twice a week. But what if you need it every day? What if you need it twice a day? What if you need more than that? And that personal support worker will come and see you when they're available, not when you need them. So maybe they'll say, okay, we'll get you out of bed at 6 o'clock in the morning. Well, maybe you don't want to get out of bed at 6 o'clock in the morning, but that's too bad, because that's all they have available. So what ends up is that most people who need more care than that, or want care when they want it, have to spend their own money for that. And it can be expensive. When you add up the cost of a daily personal support worker, which tends to be somewhere in the neighborhood of $40 to $50 an hour, when you look at the cost of maybe a private nurse, or the cost of home renovations, the cost of various medical supplies like wheelchairs and crutches and stockings for your feet and all these things that you need, that adds up. And they say if a person needs 24-hour care, you're looking between $80,000 and $100,000 a year. And where are you going to get that from? And most people who are forced into this position end up depleting their nest egg. They've saved all their money for retirement, and they have no choice, and that's gone. So an alternative to that now is this home care assistance. And what this home care assistance is a policy, an insurance policy, you want to call it that provides you with lump sums of money to draw down on, depending on how you need it. You can get two different plans. You get one for 50,000, one for 100,000, and these are pots of money that you draw down on as your need comes down. And it pays, for example, it pays $75 a day for personal support workers or nurses. It pays home conversion expenses. It pays a moving allowance. It pays meals. It pays $500 a month for meals. And what I mean by meals is not Meals on Wheels, anything. You have Skip the Dishes, you have DoorDash, whatever you have, keep your receipt and you submit it to the company and they will reimburse you. This is a reimbursement plan. You send in your receipts and they reimburse you down to the maximum of what the limit is. It also pays for medical supplies, it pays for wheelchairs, it pays for audiologists, physiotherapists, dietitians, hearing aids, wigs. All these things are included in the plan. There's a number of these things that are included in the plan.
That's so good.
It's designed to keep you at home. It's designed where if you're at home and you have professionals come to your home, they will pay for that. And they figure that most of these plans, they figure the $50,000 plan will last anywhere between 3 and 5 years. The 100,000 anywhere from 7 to 9 years, and that gives you that kind of money to get you there, either to recover from your condition or to end up in a long-term care facility because your condition just gets worse, right? But the prime point of this is that it keeps you at home, so you avoid all that long-term care problem. You avoid all the anxiety and stress of going into a long-term care facility. And you actually feel better and live longer because you're in your own environment. You're in your own home with your own lifestyle and everything else.
So when does somebody get this? Like, can anybody apply to get this, or are there restrictions?
Yes, there's restrictions. Yes. So there's no medical, like a normal health insurance or life insurance policy. There's no medical questions, but there is a health declaration. And you have to qualify for that health declaration. Now, most people can get this, but there are certain restrictions, and you really should go through the health declaration to determine that. People who have had a previous stroke won't get it. People who are needing assistance to walking will not get it. People who are insulin-dependent diabetics won't get it. But if you're a type 2 diabetic and you're on medication, yeah, you can get it. So most people can get it. There is certain restrictions. Some people can't.
Awesome.
The cost is relatively inexpensive. You're looking at an average about maybe $100 a month for this. You can buy this up to age 80, from 18 to 80, and the premiums are actually tax deductible. So they're determined to qualify under your medical expense deduction under your personal income.
So if a program you draw down on, right? So you're drawing down on 50 or 100,000 typically. Right. So you're paying your premiums. Do you pay the premiums until you've paid that much money to draw down on?
You pay your premiums until that money is exhausted. Yes.
And what if somebody only started paying when they were like in their 50s, but they needed it when they were like 56, and they only had a certain amount of money in there? They only have that to draw down on, or?
Yeah, so this is a plan just like any other insurance policy that you pay a premium for, and you may or may not use it, right? There is a possibility you're never going to use it, but you may. So let's say you start it when you're 50 and maybe you need it when you're 80. Well, then it's available for you because you've been paying these premiums all along, right? Mm-hmm. And if you buy a $50,000 plan, then there's $50,000 available when you're 80.
What if you buy it today and need it tomorrow? Does it work like that?
Yes, yes,
Yeah.
yes. Just like insurance. Just like insurance. If you paid 1 month's premium into it and then you had an incident, yeah, you could claim on.
You still have
It's
that
an insurance policy.
50,000 or
Right?
100,000 to draw down on.
That's right.
You
Now,
just keep paying.
the other point is, let's say you have 100,000 and you have an incident, and you've paid 20,000 out of your 100, then you still have 80 left, and you just
Sure.
keep it and maybe use it again.
And
Right?
then,
It's not the end of it once you make a claim. It's whatever is left over until you draw down to zero.
so I recall you saying before, so this is the home care assistance designed to keep you at home, um,
Right.
and recover, hopefully. But what happens, I think that you said there was a rider for long-term care?
Yes, there is another product called long-term care insurance, which has the home care assistance built into it, but also provides a rider that you can use to pay for your actual stay in a long-term care facility. It will pay $3,000 a month, $4,000 a month, whatever the cost is. It costs a lot more money for that, but yes, you can do that. If you feel that you really want to protect yourself from going to a long-term care facility, then
'Cause
you can buy this right.
that's really expensive when it comes to that time.
Exactly, it
Yeah.
is. But so people have to think, do I need it? Do I need it? And a lot of people who want to buy this stuff either are in the healthcare field, so they see the need and they see what happens, or they have family history of my mother went into it, or my father, for example, died of dementia, and he was in a long-term care facility for 2 years, and I saw that stuff, and it was horrendous. He was in a ward at a place on Crowding Avenue, and I hated, to be quite honest, I hated going there every week to see him, because it was like one flew over the cuckoo's nest stuff. It was people were wandering the hallways and stuff, and I felt so bad for the medical staff there, because they had to deal with this stuff. And my dad, most days, was in a wheelchair, but would get beaten up every day.
What?
Because, yeah, I was getting calls all the time. He was getting punched and stuff all the time. Not by the medical staff, but by the people who are in there, by the patients.
What?
Yeah, one guy accused him of stealing his bicycle and started beating him up. He doesn't have a bicycle. He's in a long-term care facility, but he didn't know that because mentally he was not there.
Oh my gosh. Do they have security?
Not really. Like, they have male attendants, and yeah, they run and subdue these people, but the damage is done. My dad, I would go in to see him, and he had a black eye and busted lip and stuff like that.
So you really do want to stay at home.
Right? And the point is, as I mentioned earlier in this video, is that most people, especially after COVID,
Oh yeah.
really don't want to go into a long-term care facility.
No.
They don't want to do that. They want to avoid that as much as possible.
Yeah.
And this is a way for them to do that.
Yeah. Awesome. Thank you, Bill.
Okay.